So a couple things about property taxes. One of the most important things to notate is that these are paid in arrears. So property taxes are paid in arrears. That means at the end of the year, if you think of the term rear, like your rear end, we're talking about the end of the year. So taxes don't become payable until November 1st. So November 1st is the first time that property taxes can actually be paid. So November 1st, that's our first day. Now, tax liens are assessed on January 1st. So on January 1st is when our taxes are assessed, and they can't be paid until November 1st. Another very important, crucial fact to know about property taxes is they don't transfer with the owner. So these do not transfer. So when you have one person that owns a property and then they go sell that property to somebody else, that new person that owns the property, the buyer of the property, they're going to have to pay that full year's worth of property taxes. So if you buy a property before November 1st in Florida, there's no chance that those property taxes have been paid yet. So the buyer is basically stuck with that whole bill. Now there's a whole other system of prorations that the title company should be doing, or whoever's in charge of the closing for the transaction, but they're going to basically break up on how long the seller's lived in the property and how long the buyer is going to be living in the property to make sure everyone pays their fair share and everyone gets credited for the appropriate amounts and everything equals out. But that's another episode. We'll do that probably next week. We're going to do one on prorations. We'll see, but stay tuned. Remember, we do the show every Wednesday at 12 noon Eastern time. It's free to tune in. If you do want to send in a question, you do have to be one of our students, whether you're enrolled online or in one of our classroom courses. Either way, just send in your questions. You can comment them in here on the live chats for these video streams, whether you're watching on YouTube or Facebook. Make sure you're subscribing to the channel because we do these every week. We also have our State of Real Estate show on Friday, so make sure you're subscribed because that way you could maintain access and get all these videos right away. Now, this is some of the key crucial information about property taxes, but let's just jump right into doing some math, and we'll maybe hit on some more of these topics as we go. And now, like I said, this is a very common math question that you're going to see on not only sales associates, but also brokers, pre-licensing and post-licensing. So pretty much any type of exam that you're taking or any course that you're taking involving real estate, almost 100% of the time you're going to see a property tax question, whether it's calculating property taxes or maybe even calculating property tax savings. We're going to do a little bit of math regarding that as well. So when we're calculating out property taxes, you need a few pieces of information. Number one is the assessed value. So very important that you have the assessed value and not price. Now this is very different than the price. This is what the tax assessor, the tax man, the tax collector basically assesses the property for, what the tax collector says the property is worth, and based on this amount, you're going to have to pay a small percentage of this amount. That small percentage is called a mill. And that's the other thing we're going to need. We're going to need millage rates. And there's 3 districts typically that you're going to see on your exam. Now in the real world there could be a couple other ones. This could vary based on where it is specifically that you're living, but we're going to be looking for city, county, and school board. So those are 3 different tax districts, and each one is going to have their own set of mills, or their own millage rate, and we'll work with those in just a little bit for calculating them out. So we need the assessed value, we need the millage rate, we need to know whether or not the property is homesteaded. Typically on your exam questions, it is homesteaded because that adds in some extra steps and some extra work that you're going to have to do to figure out the property taxes, but properties aren't always homestead. To give you a little bit of a refresher on the homestead, this is going to be in Florida if this is your principal residence, and there are homesteads throughout other states, but we're talking specifically now about Florida because this is where you'll probably see the biggest difference between Florida the math that we're going to be doing here for Florida versus some of the other states. But in Florida, the homestead exemption will exempt you for up to $50,000. Now we're going to break down because it's a lot more complicated answer than that, but it's up to $50,000 without any special exemptions that you can get for your homestead, which basically decreases your assessed value. So it's not going to walk you through that math in your questions. So you're going to have to know whether or not the property is homesteaded, and then we're going to go ahead and cover how to calculate out what to break down to take out that homestead exemption amount. And like I already kind of alluded to this, but also special exemptions. So there's 3 $500 special exemptions and 1 $5,000 special exemption. So basically we have a total of 4 different types of special exemptions. We have 3 of them that are going to be $500. And one of those is going to be if you're a widow. So if you're a surviving spouse, we'll put widow here to keep it short, but it could be widow or widower, just whatever surviving spouse, as long as you're not remarried, that's going to qualify for an additional $500 exemption. Another $500 exemption, legally blind. So for a $500 exemptions, you could be a widow, you could be legally blind, or there's one other special exemption, and that's if you're totally and permanently disabled. So totally and permanently disabled. I kind of ran out of room there, so hopefully you can make that out. That's totally and permanently disabled. So 3 additional exemptions you can get: the widow, if you're legally blind, and if you're totally and permanently disabled. And these are going to apply to each one of these tax districts. So it doesn't apply just to city and county. It does apply to city, county, and school board. All 3 of the tax districts, you could get these additional exemptions. And you're not limited to just one. If you're a legally blind widow or a legally blind surviving spouse, that's going to count for $1,000. So you'll get $500 here and $500 there. So you're getting $1,000 of additional exemption if you qualify for 2 of these. If you qualify for all 3 of them, if you're a legally blind widow who's totally and permanently disabled, you're going to get $1,500 of additional exemption. Now, I said there's 4 special exemptions. So in addition to this $500 one, this one only applies to the military. Or veterans, I should say. Veterans of the military. So for veterans, if they're at least 10% disabled, so if they're 10% plus disabled, that's going to entitle them to a $5,000 exemption additionally. So if you're totally and permanently disabled as a civilian, then that's only a $500 additional exemption. But if you were at least 10% disabled due to a service-connected misfortune, so somehow in the line of duty you had some sort of incident that caused you to be at least 10% disabled, and that 10% disability is determined by the VA, then you're going to be able to earn an additional $5,000 exemption. So that's some stuff we need to look at here, because with these questions, it's overall pretty simple calculation once you do it a couple of times. I have people all the time tell me, "Oh, John, how do you do this? How do you rattle off this math so much? How are you able to go through this without looking at formulas or anything like that?" And it's just practice. That's all it is. You just do it enough times, and you begin to memorize this. I don't recommend to anyone, no matter what your level of math skill may be, to just stare at the formula and try to memorize it that way, or just rewrite the formula over and over again. Work with it with some actual math problems. Get yourself a little workbook that's got some math problems in. We got a couple of those you could order. We have the exam manual. It's got a bunch of math questions. We have a whole book that's dedicated just to solving math problems. Get yourself one of those, because with that, it's going to give you something to practice with. It'll basically allow you to go in there and see how these questions are worded and know what you need to pull out of these questions, because you don't always need all the information in the question. So sometimes there's some extra information, but these are pretty much going to be our key things that we're looking for when we're trying to figure out the ultimate question of taxes due. So taxes due is typically going to be our question where we're going to be looking through all of this information. So let's go ahead and add in some numbers here, and we'll be able to start working out a little bit of math with this. So for our assessed value, let's say that the assessed value of our property is $500,000. And very important, again, this is not the price, this is not the taxable value, specifically assessed value. That's what you want to look for. That's the term that you want to see, or that the tax assessor assessed the property at $500,000. Look for that word assessment or assessed, and that's going to tell you what number we're starting with our taxes. You're then also going to check to see if it's homesteaded. It usually says somebody owns a property assessed at $500,000 and the property is homesteaded, or they own a homesteaded property. So if it is homesteaded, we're going to have to factor in those homestead exemptions. The other thing you're going to want to look for is the millage rates. These you need to pull out. So let's say we have city mills of, let's say it's 7.1. Let's say our county mills are 8.2. And let's say our school board mills are 7.9. Just pulling those numbers off the top of my head there. Again, that's why it's good to work with some sort of pre-made questions, one of those workbooks. Get yourself at the very least that exam manual. It's like $25. It's even got flashcards in this year's edition, so that's a really great study tool for you to use. It's got quite a few of these homestead exemption math problems for you to practice with, as well as detailed answer choices. So that's the key thing, like I said, with this is to practice these over and over. Now going back to our problem here, our first little step of solving this is going to be combining our city and our county millage rates. Now, you don't have to do this. You could solve these three independently, but it is going to save us some time if we combine the city and the county. In certain circumstances, you can combine all three, but it's very rare. It's really if the property value is $50,000 or less. If the property is valued less than $50,000, then you can do all three of these as one. But that's the only time this will work, only if it's less than $50,000. So it'll be a little bit extra work to do this school board one out separately, but you'll always have the correct answer if you do these two together and the school board calculation separately. So we could go ahead and add the two of these together. So we're going to pull out our handy dandy calculator here. We're going to add together our 7.1 mils and our 8.2 mils, and we get 15.3 mils. So we have 15.3 mils for our city and county, but now what we need to do is also turn this into a decimal. So in order to turn mils into decimal, this is a very important topic. That it's really a simple thing, but most people are accustomed to moving a decimal place two places, and just two places, because we're in a dollar and cent world, and people are very familiar with the two decimal places. That's not the case with millage rates. Millage rates, we actually need to move three decimal places, so we're going to go 1, 2, and 3. Now you see I draw on these swoopy lines. Maybe you remember them from grade school, middle school, high school, or any sort of math teacher you probably ever had before. The reason why you see these swoopy lines and why they look like they're childish, even people still use them, is because they work. They make sure that you're moving the appropriate number of decimal places. If you notice, we have an empty swoopy line right here, so we need to go ahead and add in a 0. So this as a decimal for our millage rates, let's get this arrow out of here to make this a little bit easier to see, is going to be 0.0153. So we're just adding that additional 0. Really, you don't even need this 0 here at the beginning. So you can just do 0.0153, and that's going to be our new decimal version of the millage rate. And we'll go ahead and calculate our school board millage rate while we're at it. And we're going to move that 3 decimal places, so we're going to have 0.079. 0.0079. Let's double check our swoopy lines. There we go. You can see, even I made a mistake here. Live television, folks. So it's crucial that you do these swoopy lines. You see, I didn't notice that I made a mistake until I put those swoopy lines in there. So I don't care how much of a math whiz you think you are. I think I'm a math whiz. I still do the swoopy lines just to make sure I'm not making a simple mistake. So we have 0.0079. So we're moving 1, 2, and 3 decimal places. Millage rates, you always convert by moving 3 decimal places to the left, or if you want to turn this decimal back into a millage rate, we're going to move that to the right. So 3 decimal places. I can't hit home on that enough just because so many people mistake it with just the 2 decimal places that we're used to. So be very careful with that, because that's an easy way to just completely throw off all of your math, making sure you're moving 3 decimal places over. Now let's also say that this person is a widow. We'll go ahead and add in one of these additional exemptions here. Let's say that they're a widow, they're a surviving spouse. You could see it worded either way on your exam, widow or surviving spouse. So another thing I want to point out with this is you could also see it hidden at the beginning of the question. This happens so much, and that's why it's so important to practice with these questions, these math questions, before you actually go and test them, so you don't make that mistake on the exam. You make the mistake when you're doing the practice questions, because a lot of times they like to hide this at the beginning of the question. It'll say a widow owns a homesteaded property assessed at $500,000. And a lot of people, for whatever reason, this is most people as a matter of fact, they'll skip right over that beginning part of the sentence. Usually beginnings of sentences don't contain valuable information. It's words that aren't really necessary to understand what the sentence is saying. But in this case, if it says a widow owns, it's very important to know that that widow qualifies for an extra $500 exemption. With these math problems, the math really isn't the hard part with it here. You practice that math a couple times and you'll be rattling that off. Once you have the math down, that's where you just need to make sure you're reading through the question slowly and carefully. Let's see, and let's leave out the veteran.
Did you know that the Florida real estate license exam usually averages a 50% pass rate? The good news is that you have the opportunity to be a part of the passing 50%. The Florida real estate exam covers three main areas: real estate principles and practices, Florida real estate laws, and general real estate laws. Our exam review class focuses on reinforcing the key concepts of these areas in a fun and engaging way. You'll also learn valuable exam strategies and get lots of practice with real estate math problems. This course includes our exam prep textbook that contains over 600 practice questions to help you prepare for the state exam. And we're so confident that we have the most comprehensive exam prep courses in Florida, we back all of our students with our exclusive 1-year retake guarantee. Our class sizes are limited and tend to fill up quickly, so reserve your seat today. Registration is easy and just takes a few minutes on our website, tampaschoolofrealestate.com. You can also stop by our administration building or give us a call at 813-928-0106. Our advisors are standing by to answer any questions you have about preparing for your Florida real estate license exam and starting your exciting new career in real estate.
Hey, if you liked the show today, be sure to hit like and subscribe and post your comments. Thanks so much for watching. And welcome back to this week's edition of Ask the Instructor. Today we're talking about property taxes. So before we took that quick break, we were going over the information you need to pull out of these types of questions to understand the scenario in order to properly calculate the property taxes. So number one, we need the assessed value. That's $500,000. You then need to pull out the millage rates. So we have our city at 7.1, our county at 8.2, our school board at 7.9. We'll get to this in a second, what we did here. We have our homesteaded property. So if the property is homestead, we're going to need to factor that in. So we're going to do that on the next step when we start doing some math for this. And then we have some additional exemptions. In this case, we have the additional exemption of being a widow or being a surviving spouse, which gets us an extra $500 exemption in addition to the $50,000 we're getting for the city and county and the $25,000 we're going to be getting for our school board taxes. So that's our key information we need here. So let's go ahead and copy this down here. So when you're solving these types of questions, you basically want to break it down into two little columns. Just go ahead and put these up here so we could get some more extra space. And then our total between the two was 0.0153. So we have our three millage rates, the 7.1 for the city, the 8.2 for the county, and the 7.9 for the school board. Our combined for the city and county was 0.0153. We converted that to a decimal. And over here on the school board side, 0.0079 when we convert that one to a decimal. So we could go ahead and get rid of this here and just leave our assessed value at the top. Now you notice I'm clearing out a lot of room. That's why I wanted to rewrite that stuff here, is to make some room for what we're about to calculate. The reason why is I like to do this a very specific way, and it seems to make the most sense with people for figuring this out. So I'll break it up into a table, into two sides. So you want to do a table, two sides here, a little T table, and on this side we have our city and county, and on this side we have our school board. So always start with this on your scratch paper for your exams, or if you're just calculating this for the heck of it in the real world. This can come up where you want to figure out some property taxes based on a certain value for a property. You want to break it up, the city and county here and the school board separately. Again, we're always breaking out our school board separately. We can't do all three of them together unless the value is less than $50,000. So it'll be correct if it's less than $50,000 if you do it this way, or if you combine all three of them together. So always just separate out your school board. It's one less thing for you to remember. Makes your life a little bit easier. So now we're going to start with our same assessed value at the top of each one of these. So we have $500,000 of assessed value, and that doesn't change for our different tax districts. We have the same assessed value for all three tax districts, the city, the county, and the school board. Where it changes and why we have to do these as two separate columns here is we're going to have different exemption amounts. So we have different exemption amounts. On our city and county side, we get a base $25,000 and an additional $25,000 exemption. So we're getting a total of $50,000 in exemption. You get this $50,000 exemption whenever the property value is over $75,000. You're going to get $50,000 for your city and county, and then on the school board side, it's $25,000, and that's basically maxing out your tax exemption. So $50,000 on the city and county side and $25,000 on the school board side. But if you also remember, our homeowner was a widow. So because the homeowner was a widow, we also have to subtract out $500 on both sides. So we need to subtract a total of $50,500 on the city-county side and $25,500 on the school board side. The difference of these two numbers is the reason why we're doing these as two separate columns. If the school board wasn't special and got the full exemption, then we could do it all together. But since the school board caps out at $25,000 worth of exemption, we need to calculate that separately as a totally separate, different problem. So let's go ahead now and go ahead and solve this math. We'll go ahead and take our $50,500 out of there, and that should give us $449,500. And this number is called taxable value. So very different than our assessed value. Taxable value is the value when you take out your exemptions. So assessed value is what we start with, then we take out our exemptions, and what we're left with is taxable value. So very important that you understand that. We go from assessed minus our exemption, and that gives us taxable value. Knowing the terms, being able to speak the language of these math questions is really going to help you out for solving them. So that's our taxable value. Now on our school board side, let's go ahead and figure out our taxable value as well. So now we're just subtracting $25,500. So this is going to give us a taxable value of $474,500. So $449,500 and $474,500 are going to be our two taxable values. Again, now we have a difference. This difference that we're subtracting out here, this extra $25,000, again, that's the reason why we have to do the city and county tax calculation separately. Now, once we figured out the exemption, I mean, this arguably is probably the hardest part of that, pulling out this information and getting to this point here, because now all we're going to do is take our millage rate, convert it to a decimal, the 0.0153, and just multiply that over here, the $449,500 times 0.0153. And then over on the school board side, we're going to do the same thing, except for we're doing it off of the school district millage rate, which was 0.0079. So we're going to do those calculations. Going to pull out our handy-dandy calculator again. And we're going to do 449,500. Make sure you do not drop that 500 there. That's a really easy mistake to make. A lot of people just forget about that 500 and just do $449,000. It's just a computation thing. So that's why it's so important to write down your work like this. And like I said, I recommend writing it out exactly like we're doing here with the two columns side by side. So you have your 449,500. We're going to multiply that by our 0.0153. and we get $6,877.35. Now that's not our total tax bill. That's just the tax bill for the city and county district. The way these taxes are calculated is the city has a certain budget they need to make. They take out the money that they get for non-property taxes, like the little bit of the sales tax and things, some other things. But for the most part, the city, the county, and the school board are largely funded through property taxation. So they take this total value of everything, they subtract out all the money that they're already getting, and then whatever money they still need to raise, they come up with these millage rates by dividing that out. So this $6,877.35 is this person's share of paying that tax bill based on their $500,000 property. So that's just our city and county side. Both of those are being allocated to the city and the county. If you wanted to find out how much was going to the city and how much going to the county, then we wouldn't combine the city and the county up here. You would multiply them out each separately. But if your end goal is to just figure out what the total tax bill is, then you could go ahead and combine them like this together, because we're going to be adding everything together in the end anyways. But always, always, always do your school board separately. You always have to calculate the school board separately. Very important. So let's go ahead and punch this one in our calculator now. Again, very important. We're dealing with different taxable values here, so we need to go ahead and now take our $474,000. Again, don't drop the 500 times 0.0079, and we're going to get $3,748.55. And that's our school board tax bill. But we're not done yet. We need to add the two of these together. So let's go ahead and bring this one down here. We'll add it in. We have $3,748.55. We're going to add that to our $6,877.35. And we're going to get $10,625.90. So based on these millage rates, that would be the tax bill for the year for this particular property. Like I said, we took our city and county, we took our assessed value, we subtract out our exemptions. We had the additional exemption because this was a widow. That gives us a taxable value of $449,500. We multiply that by our millage rate. That millage rate times that gives us $6,877.35. We did the exact same thing over here, except for using a different taxable value and the millage rate for the school board taxes to figure out the $3,748.55. And then we're just adding that back in here to the two of these together. So we get a total of $10,625.90 in property taxes we'd have to pay for this $500,000 property. So that's pretty much everything you need to do for calculating your taxes due. There's a lot of steps involved with this here. As you can see, the math really isn't that difficult. We have some subtraction, some multiplication, and some addition, but that's it. That's the hardest math that you have, which even without a calculator, you could probably still figure this all out without much issue, but you get to use the calculator on the exam. So it's very easy calculations. It's just remembering what step to do them in and not making the easy mistakes. Like I said, like maybe just a computational thing of dropping this 500 here, or making sure that you're moving over 3 decimal places for your millage rate. So if you make sure you do those things correctly, like I said, practice with these types of problems, and it's really going to help you out. That way you make your mistakes when you're practicing rather than making on the mistakes on the exam, which is what we do not want. We do not want to make mistakes on the exam. We want the mistakes when we're practicing with these, so we know not to make the mistakes on the exam. So that's our total property taxes due. Key thing is to make sure you're looking for total taxes due. And that's what we just solved out here, total taxes due. Now when we come back after this next break, we're going to actually calculate tax savings. So we're going to use the same scenario here, but what we're going to be doing differently now is we're going to be figuring out how much money we saved, how much higher this would have been, what the additional amount would be if we didn't have these additional exemptions factored in for our homestead property, what we'd have to pay if this was a second home or for whatever reason it's not a homesteaded property. So stick with us. When we come back after the break, we'll be calculating property tax savings.
When you look back on your real estate career, you'll remember the moment you decided to begin this journey. The moment when you finally decided it was time for change. The moment when you decided it was time to take charge. The moment that changed the direction of your life forever. Now is that moment.
Hey, I'm John Carissimo, and I'm here to tell you about State of Real Estate. This show is going to be live every Friday at 12 noon Eastern Time, and this is going to be a show for you guys to chat in and get interactive live with us to help mastermind and build your real estate business. So make sure you tune in this Friday at 12 noon Eastern Time. Again, that's Fridays at noon Eastern Time. You can find the links in the description for this video. Look forward to hearing from you on Friday.
After the show, be sure to visit tampaschoolofrealestate.com. Again, that's tampaschoolofrealestate.com, where you'll find all the information you need to start your career in real estate. Also, be sure to check out our Success Center, where you'll find helpful tips for building a successful real estate career.
Hey, if you liked the show today, be sure to hit like and subscribe and post your comments. Thanks so much for watching. Hey, and welcome back to this week's episode of Ask the Instructor. Saw a comment from Mito Rosales. Mito, if you're still tuned in, check out our stream on YouTube, because Facebook only lets us broadcast in 720p on YouTube or on our Success Center, tampaschoolofrealestate.com/success. You could actually watch this in full 1080p, and it'll help you make out this stuff on here a little bit clearer when we get into some of the smaller text on that. So, we just figured out calculating total property taxes due. Now next, what we're going to be calculating out is tax savings. So this is taxes due. Next, we want to figure out tax savings. And very different questions. That's why it's very important, like I said, to practice through these questions so you could read through them. Like I said, we have that exam review book. It's $25. It's got like 700 practice questions in it. So lots of practice you could have with various questions, such as calculating homestead exemption, calculating property taxes due, calculating tax savings. And the best part is, if you buy that book, you actually get a credit towards our weekend review class. We actually have a weekend review class coming up this weekend in New Tampa. And I'm actually the instructor for that class. So come out and see me in person this weekend if you want some help practicing for your state exam. It's 16 hours across all Saturday and Sunday, so it's an intense class. Give us a call. The phone number is 813-928-0106, and we'll be glad to get you signed up for that. You can also sign up online at tampaschoolofrealestate.com. So now let's go ahead and calculate out some tax savings. What exemption savings we're getting because the property is exempted. So being that this millage rate is essentially a very small percentage that we're calculating out, it's a very small piece of this $500,000. Every time we decrease this by decreasing by the 5,000 and the 500, that's making this end number that we have down here much smaller. So now the question is, how much are we saving? How much more would this be if we didn't have these tax exemptions? And so to calculate this out, we're still going to do our two different sides of the board. So we're still going to do our city and our county and our school board on two opposing sides. Because as far as the math goes, and that's what's great about this question, as long as you can identify that this is a different question that we're talking about here, then it's a lot of the same math, but just a couple different numbers that we're plugging in. Now, when we're calculating the taxes due, we're multiplying the millage rate by the taxable value. When you want to calculate tax savings, that's the big difference now. We're dealing with tax as opposed to taxes due. Then what we're going to have to do is take our exemption amount. So we take our $50,500 in exemption from the city and county, and we add our $25,500 exemption on the school board side. So these are our two exemption amounts. And now we're just going to do the same thing of multiplying by the millage rate. So 0.0153, and on this side 0.0079. And that's really it. This is going to give you your answer to the question once we add the two of these together. So let's go ahead and calculate this out here. We have 50,500 times 0.0153, and that gives us $772.65. So we saved $772.65 on our city and county side by the property being homesteaded. Now over on our school board side, we're going to go ahead and take our $25,500 and multiply that by 0.0079, and that ended up saving us $201.45. Now to figure out our total savings, again, we're just going to add the two of those together. You can see how a lot of this stuff is congruent with what we just calculated for calculating the taxes due. So we're just going to add our 201.45 over here. And that's going to give us a total tax savings of $974.10. So if the property was not homesteaded, we would have to pay another $974.10 on top of the $10,600 that we were paying before. So all this is calculating out, and that's the big difference here. This is calculating how much more we would have to pay, how much money we're saving because the property is homesteaded. So that's the only thing we're doing here, is it's the amount that we're saving because the property is homesteaded. So let's go ahead and try another one of these questions here. Let's try another one. We'll do both calculations. We'll do the taxes due and the tax savings. So two we're going to go ahead and calculate out here. So let's now say we have an assessed value of $175,000. So our assessed value is $175,000. We'll say the city is 9.1 mils. Our county is, let's say, 6.2 mils. And let's say our school board is 5.1 mils. So we have our three millage rates, 9.1 for the city, 6.2 for the county, and 5.1 for the school board. And let's say that, yes, this is a homestead. And let's do it now without any additional exemptions. So no widow, no legally blind, no total and permanent disability, and no veterans who are at least 10% disabled. So none of the additional exemptions. So you can see one of these without one of the additional exemptions factored in. So we'll go ahead, and again, we're always going to break this out into two separate sides. So we have our city and county over here, and we have our school board over here. So you always want to separate these out to two separate sides. Now, solving this we're going to go ahead and do first calculate the taxes due. So for taxes due, we're going to take our assessed value, $175,000, and that's going to be the same on either side, $175,000. And then for our city and county, we're going to go ahead and subtract out, since this is above $75,000, we're getting the total exemption. So we're getting the total exemption here, so we're going to subtract out $50,000. And $175,000 minus $50,000 should give us $125,000. And that's, again, our taxable value. So we have our assessed value here. We have our exemption here, and we have our taxable value is what we're subtracting this out to get. So we have $175,000 assessed, $50,000 exemption, and that gives us $125,000 taxable value. Now once we have this taxable value, we can multiply this by the millage rate, but first we have to combine our city and our county millage rates. So we're combining the two right here, so we need to combine these two together. So we have our city and county, and that's going to equal to 9.1 plus 6.2. So between our city and county tax districts, when we add the two of those together, 9.1 plus 6.2 is 15. Everything I do, I always seem to come out with 15.3. There's got to be some sort of science as to why I keep coming up with 15.3 mils. So we have our same millage rate right here, 15.3. We're going to carry this over. Again, 3 decimal places, so that's going to be 0.0153. And we're going to go and multiply this down here by 0.0153. So that's our mils. And now we go ahead and multiply $125,000 times 0.0153. That gives us $1,912.50. So that's our city and county taxes, but we're not done quite yet. We still need to figure out our school board taxes. So to figure out school board taxes, we're going to pretty much be doing the same math, except for we're not subtracting $50,000, we're subtracting $25,000. Remember, $25,000 is the maximum exemption you could get for your school board taxes. That's why we're doing this as a completely separate problem here. So $175,000 minus $25,000 gives us $150,000. So $150,000, that's our taxable value. Now our next step is multiplying it by the millage rate. The millage rate for the school board is 5.1 mils, so that's going to be, we'll go ahead and have 5.1, and then do our swoopy lines, 1, 2, and 3. So we have 2 zeros that we're adding in there, so we're going to multiply this by 0.0051. So $150,000 times 0.0051. And that's going to give us $765. So our school board tax bill is $765. But now the question's asking for total taxes due. So what we have to do at this point is combine the two of these together. So we're going to just carry down our school board over here. We're going to add our $765 to that. So $19,1250 plus $765 is going to give us $2,677.60. And that is our total property taxes due. Now when we come back after the break, again, we're going to go ahead and do this one calculating out tax savings. So stick with us. You're watching Ask the Instructor.
Are you considering getting your real estate license via one of our classroom courses? At the Tampa School of Real Estate, our courses have been designed to prepare you for the Florida Real Estate Commission licensing exam, as well as teach you about the fundamental aspects of the real estate business. In this class, you'll learn about appraising property values, real estate contracts, the mortgage industry, and much more. We offer multiple class formats and several locations to make getting your real estate license easy. You can complete the course in as little as 2 weeks in one of our day classes. Or if you have a busier schedule, you might prefer our evening classes. All of our classes include the course textbook as well as other supplemental materials. At the Tampa School of Real Estate, all of our instructors undergo a rigorous training program and have real-world real estate experience in order to best prepare you for the class and state exam. We are so confident we have the most comprehensive licensing courses in Florida. We back all of our students with our exclusive 1-year retake guarantee. Our class sizes are limited and tend to fill up quickly, so reserve your seat today with a $49 deposit that will apply towards your course tuition. Registration is easy and just takes a few minutes on our website, tampaschoolofrealestate.com. You can also stop by our administration building or give us a call at 813-928-0106. Our advisors are standing by to answer any questions you have about obtaining your Florida real estate license and starting your exciting new career in real estate.
Hey, if you liked the show today, be sure to hit like and subscribe and post your comments. Thanks so much for watching. Alrighty, and welcome back to this week's episode of Ask the Instructor. I'm John Corsimo, and this show is brought to you by the Tampa School of Real Estate. If you're thinking about starting or enhancing your career in real estate, give us a call. The phone number is 813-928-0106. That's 813-928-0106. If you want some extra help with the math questions such as property taxes, come to our weekend review we have this weekend in New Tampa. Same number, call up, we'll get you registered. We also have a bunch of online tools you could use as well, in addition to all these videos. At the very least, I mean, it's free to go on there and check out all these videos, so take advantage of what we put up here every single week with these Ask the Instructor sessions. So going back to this question, we just went ahead and solved out our taxes due. So we took our assessed value, subtracted our exemptions, that gives us taxable value, we multiply it by millage rate, and then we add our two separate sections together, and that gives us property taxes due. So overall, you practice this math a couple times and you use the same method. That's the key thing to kind of help build the repetition and build the memory with this, is making sure you're doing this in the similar fashion. If you try a bunch of different methods, you're not going to really remember them. Pick a method that you like. This is the one that I've found most students really enjoying. This really makes sense to them. If you like another way, then just stick with that way and work through it. There's a couple different ways to solve these problems. This one is pretty much the easiest one to work with. So now we're going to go ahead and calculate the tax savings for this particular property. Now again, the difference here when we're calculating out tax savings is we're multiplying by the exemption amount rather than the taxable value. So we're going to put our divider back down the line. You always use the same little table with the divider for all of your homestead types of questions, because that'll really help you out for solving these. So you take your exemption amount now. That's the key thing. When we're dealing with property tax savings, we're dealing with exemption amount as opposed to the taxes due. So our exemption amount is $50,000 on the city and county side, and on the school board side, it is $25,000. Now again, if this was a widow, if it was somebody that was legally blind, if it was somebody who's totally and permanently disabled, or a veteran that's at least 10% disabled, then we're going to have to factor in some additional exemption on top of these here. But since that's not the case, we're just dealing with a basic situation with no special exemptions. That's why we just had the $50,000 and the $25,000. So now not too much that's different. Again, we're multiplying that by our millage rate. We're combining our city and county together, so 9.1 from the city, 6.2 from the county. Together that's 15.3 mils, and as a decimal, 0.0153. So we multiply this side by 0.0153. We're going to put that in our calculator. So we're going to put in $50,000 times 0.0153. And that's going to give us $765. So our savings on this side is $765. That's how much we saved on our city and county taxes. We'd have to pay $765 more for our city and county taxes if the property was not homesteaded. Over on our school board side, we're going ahead and do the same thing here. We're taking our millage rate of 5.1 mils, and as a decimal, we can go ahead and convert that. So 5.1. So 1, 2, and 3 swoopy lines, so 2 zeros we're going to be adding in there. So we'll go ahead and do 25,000 times 0.0051, and that gives us 127.5, or 50 cents, since we're dealing in dollars here. And we're just going to go ahead and carry down this 127.50 and add it together. So 765 plus 127.50 gives us a total tax savings of $892.50. So again, the math is simple, and as we go through these a couple more times, you're probably already starting to get the hang of it. If you're not quite yet, don't worry about it. Just go through these a couple more times. These videos, these Ask the Instructor sessions, not only can you access this recording as soon as it's over, but you could actually go back and revisit all of our previous recordings of our Ask the Instructor show and see all these math problems. You could slow it down. If you're watching it on YouTube, they got a really nice feature. You hit the little gear icon, and you could slow this stuff down so you have time to work this out as you go. And it makes it a really great study tool. But at the very least, do some sort of repetition. Even if you're starting to get this now, don't let that, unless your exam's tomorrow, practice this a few more times before you go to take your exam, because that's really going to help you out for remembering this way to solve this. Because again, there's some tricks. So you want to make sure you know these and you have this down pat, because it's pretty easy to get a point for this type of question. And sometimes there's multiple questions like this on your exam. So make sure you have this down pat. So it looks like we still got a little bit of time. We'll do a bonus question. And now this is still related to property taxes, but we're going to go ahead and do now for calculating what the millage rate would be. Now this one's a little bit less likely to show up on your exam. It is still fair game for the exam, so it still definitely could show up. It's not as crucial to know quite as much as calculating taxes and calculating savings, but it's still a really good concept to know, and it helps you understand this whole property taxation process a little bit better. So we're going to have a ugly looking formula here. So this is how they come up with the millage rates. Now, if you were watching earlier, you know that in order to figure out these millage rates, what the county, what the city, what the school board does is they take their budget and then they subtract out non-property revenue, non-property tax revenue. So they take their budget, how much money they need to raise. So if we're dealing with the city, it could be the city, it could be the county, it could be the school board, it could be any one of these districts. This is how they come up with the millage rates. They take what their budget is. So if the city says, okay, we need to raise $1 million, we're going to go and subtract out the $100,000 that we get from sales tax or whatever other methods they have of raising tax money. So they subtract that out. What we're left with is how much money we still need to raise after we take out the sales tax and all the other ways they have to generate income for the city or whatever municipality we're dealing with here. So that's our first part of this problem. The next part of this is taking now, and this is how we're figuring out our millage rates. This is the whole formula for it. We're taking our assessed values. Now, it's not just the assessed values for a single property. We're dealing with the assessed values for all the properties in this entire city. So all the properties in this particular municipality within this entire city. So that's our total assessed value minus total exemptions. So you have your budget minus the non-property tax revenue, and then your assessed value minus your exemptions. And now this is the formula. I know it doesn't look pretty, but it's really pretty easy. You're just taking the budget minus non-property tax revenue, the assessed value minus the exemptions, and then those two numbers, we're going to divide them by each other. So let's put some numbers behind this. Let's say the budget for the city, for this particular city, it's probably a lot more than this for Tampa, we'll say we're dealing with a smaller city here, is $1 million. So $1 million, that's our budget, and let's say that they raise $100,000 from sales taxes and other ways they have to raise money for the city. So that's $100,000 that we do not need to account for. So that's our first part of the problem. Now let's plug in the rest of the numbers here. So let's say the property taxes in this neighborhood, let's say that there are the assessed value, I should say, for these properties. So our assessed value for all the properties in the city, let's say it's $22 million. So we have $22 million worth of properties within this particular city. And now, again, we have to take out our exemptions. My math probably is way off here, but let's say it's $2 million worth of exemptions. I don't know if these numbers would work out in the real world, but the math is going to be the same for whatever the numbers may be in case you do see this on your exam as well. So we have our $1 million of budget, our $100,000 in non-property revenue, that's like our sales taxes and other ways the city has to raise money. Then we're going to divide all of that, whatever this comes out to, the $900,000, we're going to solve that one next. We're going to divide it by our total assessed values of $22 million minus our exemptions, our total exemptions of $2 million. So ultimately, the math that we're going to have here to figure out the millage rate is going to be $900,000 divided by $20 million. And that's it. I know this seemed like a lot and it seemed like an ugly formula, but it's really pretty easy. It's just budget minus non-property tax revenue divided by assessed value minus exemption. Now, if you remember the parentheses back in your algebra classes and whatnot, you remember that the parentheses means that you do everything inside the parentheses first. So you need to figure out this 900,000 and then you need to figure out the 20 million, and then you could actually do the division. And when we go ahead and plug this in here, let's see if we end up with an even remotely realistic millage rate. We'll do 900,000 divided by 20 million. And that gives us 0.045. So that means that's what the city needs to charge. And now this is going to have to move over 3 decimal places. So that's 45 mils. So no, this is not a realistic scenario. If the math were the same for a more realistic scenario, then everything would work out with this here. But yeah, this would be 45 mils the city would need to charge. So basically what this means is this city has way too high of a budget for what they need to account from their their property taxes. They're actually maxed out at 10 mils, so you couldn't have property taxes without some extra legislation to push that cap a little bit higher, but that 45 mils would not happen in the real world. But the math to figure this all out is going to be pretty much the same for all of this here. So that's going to be for calculating out your city millage rate. And the same thing's going to work for the county, for the school board. The only difference is whose budget it is and what properties fall within that particular county or within that school board district or whatever it may be. So hopefully this episode has helped you understand property taxes a little bit better. We could probably do a whole nother episode on more information about property taxes. So keep watching every Wednesday at 12 noon Eastern time. We probably will do another episode on calculating out property taxes. Now, so we have special assessments we could talk about, the Greenbelt Law. We have the Save Our Home Amendment. There's just so much about property taxes, so much calculation. And this is stuff that applies to everyday homeowners that own property because they all have to pay property taxes. So if they want to kind of look behind the curtain and maybe understand why they're getting charged this amount, that's where it's really good to know this information. So I thank you guys so much for tuning in today. Like I said, if you missed any of this stuff, you can go back and watch the recording. This is on Facebook. It'll be saved on there. It's on YouTube, on our YouTube channel, and also on tampaschoolofrealestate.com/success. That's our success center. It's tampaschoolofrealestate.com/success. You'll be able to find this episode as well as recordings of all of our previous episodes for lots of different math problems like this and all kinds of little helpful tips and tricks for your exam. That's all I have for you guys today, so I hope you've enjoyed watching the show. I'm John Carissimo, and you've been watching Ask the Instructor.